Good afternoon, everybody. My name is Brent Moore. It's time to get to know Schwab.com a little bit better. Today, I want to talk about technical analysis on the Schwab.com website. We're going to do that here in just 1 minute. But before I do so, let me just mention a couple things. One, I'm joined alongside by Barb Armstrong, who's in the chat helping me out today. She has some wonderful classes to check out throughout the week. And she has one that's called Trading a Smaller Account. And so if you yourself have a smaller account, make sure you check that one out. You can follow Barb or myself on X at Brent Moore CS, at Barb Armstrong CS. There's a few disclosures I need to go through before we get to the meat of the session here, and they include the fact that the information today is for general informational purposes only. Should not be considered an individual recommendation or endorsement of any particular security, chart pattern, or investment strategy. And I'm going to be showing specific securities today, and they are not recommendations, but I think they're good illustrations here of the principles I'm going to try to teach there. Remember, all investing involves risk, including risk of loss. So without further ado, let's head on over to the not the Thinkorswim, the Schwab.com website. I was about to mention Thinkorswim here because I want you to be clear. We're going to be talking about technical analysis and charting today. And if you are going to be very advanced with your technical analysis and charting and really want to use more advanced features, the Thinkorswim platform is something you should check out. But I want you to be familiar with what you can do on Schwab.com, because there's going to be times where you'll probably want to use Schwab.com as well. So just realize you have both of those platforms there. And so let's go here. Let me just show you, if you wanted to try out the Thinkorswim platform, where you would go on that. Okay, and we're going to do this. We're going to go to Trade right at the top, and we're going to go to Thinkorswim desktop. Now, I'm not actually going to go there. I just want to show you where that is. And so what we're going to do, though, is we're going to focus on the charts here on Schwab.com. And to do that, you just bring up a symbol. So I can pull up a symbol. I'll just put an F for Ford, click enter on that, and it comes up, and you may see little charts along the way. These are not the charts I want to look at. I mean, these are nice and quick, but I want to show you the full octane charts, if you will, there, okay? And so what I'm going to do is I'm going to click on the symbol right here, not the name of the company right there, click on that, and bring this up, and we're going to come up, and you have all this information on the company. And I'm not going to go through most of the information, but you have analyst reports and whatnot, but you have this area for chart here. Now, even this, you can change your time frames, but that is not what I'm going to be looking at. I want the more robust charting feature here, and that is to I'm going to click on Show More right there at the bottom of the page. Now, when I say technical analysis, I mean using charts to help you make investment/trading decisions. That's what technical analysis is. In the markets, very often we'll talk about technical analysis as opposed to fundamental analysis. It's kind of a fundamental distinction, and you just need to be aware. It's just basic terminology, and it's going to help you out if you know that. Fundamental analysis you can think is synonymous with financial analysis. Financial analysis, you're looking at numbers, maybe ratios, maybe earnings, maybe valuation statistics. That's fundamental analysis. For the most part, when we're talking about technical analysis, we're looking at charts. Now, one of the charting features on Thinkorswim is you can actually chart out certain fundamental ratios. We'll get to that in a little bit, but that's where I want to start today, and so that you know where we're going with that. Technical analysis, we're going to be looking at charts, and it all starts with what chart type you're going to use. I just brought up this chart here right now, and here's a chart, and we're just looking at Ford, but we'll look at some different symbols here. And I just want you to mention one of the most perhaps the most fundamental distinction you're going to use when you're charting is what type of chart you're going to use. If you go above the chart right here, it's going to give you different chart types. Now, this is not unique to Schwab.com. You can do the same thing, maybe some different terminology, but you can do the same thing on Thinkorswim or other charting platforms. But it's important that you know this. I have a mountain chart, and sometimes mountain charts are called area charts. Fair enough, doesn't matter which one you use. Here we're using the term mountain. And you could also use a line chart, and you're going to see a line chart looks basically the same thing, it just doesn't shade it in. When would you use one of these? Well, the basis of these is it's connecting each day's closing price on the stock. And so the only data point for any given day is the closing price. Now, that may be fine if you want to simplify it. Okay, that's fine. But you also are losing some information that especially shorter term traders, intermediate term traders probably want to see the intraday trading. But you may still use this when you're looking at things like, say, a mutual fund or an exchange traded fund. I'm not going to get into those today, but those you have to realize only price one time a day. There's just the one time a day it gives you a different stock price or different fund price. And so it probably makes sense to use a mountain chart or a line chart to display those. But most traders probably, it's not typically their preference on those. So I wanted to show you those, but I'm not going to dwell on those. Now you can use an open, high, low, close chart. This is what we call a bar chart typically. And let me just zoom in here a little bit so you can see it a little bit better. I'm going to go to 3-month chart, and you can see what any of these look like. This is going to give you essentially the same information that is available on a candlestick chart. Now, if you watch our webcast, you'll see we use, Barb uses, I use, other coaches typically use candlestick charts. This is going to give you a lot of the same information. And this is actually how I started charting on using these charts. I actually prefer candle charts, but it doesn't matter here which one you use. Now, Wiley says, hey, if I'm trying to identify certain things like support and resistance, sometimes the line chart or the mountain chart may actually help you out. So you got to use the tool that works for you here. And maybe this open, high, low, close, this bar chart works for you here. If you look at this, you'll see on any of these bars here, there's a vertical line. The top of the vertical line represents the high of the day. The bottom of the vertical line represents the very low of the day. And there's a horizontal line sticking out to the left, that's the opening price, and a horizontal line sticking out to the right, that's the closing price of the day. I'm not going to focus on this, although you could effectively use that, because in my experience, and let's be honest, that's one reason you're here, is just to hear other people's experience here. The candlestick charts are the more popular chart here on this. So I'm going to click on candlestick. And when I click on candlestick here on Schwab.com, you're going to see some different candles. Some of these candles are filled in, and some of these candles are not filled in. They're empty candles. Well, the empty candle means that the close is higher than the open. Okay, so we open down here on this one, right? If you can see that, open right here on this, we closed up there. So it's an empty candle. On the closed candles, such as this one, we opened up here and we actually closed right down there. Okay, we closed right down there. And what about if it's filled in green? Well, it means it's a higher close. It's a higher than the previous day's close, because the previous day's close was right there, but it actually opened here the next day and closed there. Okay, and then finally, what about a red candle? And it may be a little hard for you to see the colors of these candles. That's a green candle I'm pointing out. This is a red candle. So it's a red candle. What is a red candle? A red candle, if it's colored red, it means it closed lower than the previous day's close. Well, the previous day's close was up here, okay? This close was down here, but it actually went up for the day and that's why it's a hollow candle. So that's the basic candle chart on Schwab.com. If you want to compare this to a chart on Thinkorswim, the Thinkorswim platform, then this would be most comparable to the candle trend chart on the Thinkorswim platform. Whereas if I change this and go to filled candlestick, there's just basically two flavors. Up day, higher than the previous day's close, or down day, lower than the previous day's close. And green is up, red is down, and this is more similar to just the basic candle chart on the Thinkorswim platform. Thinkorswim platform, you can configure a lot of different views on it, but that's basically what it is. So I'm going to stick mostly with candles charts today, but let me just point out this. There are these percentage charts too. Sometimes you may find those helpful, especially if you're comparing like the performance of one stock to another. If you click on percentage, it shows this whole chart. Here's the line chart again, but it puts it in percentage terms. And so there you go. That's what that does. Now, sometimes the percentage terms may be very helpful to you. For example, if I want to compare to, let's say something else, I want to compare it to a particular sector, or I want to compare it to an index such as the S&P 500, what I can do is I can pull that up. Hold on, let me do this again. And well, let me just do it this way. We'll click on that. There we go. And now I can see what the S&P 500 has done and what Ford, which is our example stock right now, has done. And that's very helpful when you're looking in terms of percentages, comparing apples to apples, especially because some stocks are very expensive stocks and some stocks aren't so expensive there. So that's the first thing I wanted to point out to you was different chart types. I would say in general, more active traders tend to use candlestick charts, and maybe longer term traders or investors, maybe it's not as important to them, but that's what we got there. Okay. So I want to start with that, but let me just mention this distinction. I mentioned the term investing and trading. Investing implies longer term holding periods on the security you're looking at. Trading implies shorter term holding periods. You can change those time frames on the chart, and typically longer term investors are more likely to look at longer term charts. Here's a 1-year chart. Maybe you want a 5-year chart. There's 5 years worth of data. Maybe you want a 3-month chart. Now notice, in addition to right there where it gives you the length of the graph, each data point, in fact, let me do this. I'm going to go up here and I'm just going to pull up a candle chart. Here's a candle chart. Each data point on this represents 1 day's worth of trading. Okay, so here I have daily. If I want to show weekly, I can change that to weekly. And now I have 3 months where each of these candles represents 1 week's worth. But I'm going to stick with daily here for the time being. You need to incorporate a time frame that is appropriate for the type of trader that you're going to be. So let me give you kind of a distinction between some different types of traders. One type of trader would be we'll call a long-term investor. Okay. And a long-term investor may hold on to that stock for, I guess any time period, but that could be your intention, but typically many months to years, perhaps several years. Okay, so that's a long-term investor. And then I want to talk about another type of trading, and that is called trend trading. A trend trader is hoping to invest in a stock and ride the trend, so to speak, of that stock. So let me give you an example of this. I'm going to pull up a different stock here. I'm going to pull up NVIDIA. This is a company you guys all have heard of. I put in the symbol wrong, NVDA. And so here's NVIDIA. And what a trend trader likes to do is so we're talking about trend trading here. They like to get in a stock, say we get in, and as long as it's trending up, they're going to stick with it. And that's the goal. Now, it may have ups and downs along the way, but they're not looking to get out every time it drops a little bit. That's what a trend trader does. But at the same token, sometimes there's swing traders too. That's the third type. So we said long term. I'm just going to abbreviate LT for long term. I'm going to say trend traders who are going to hold through those ups and downs, but try and stay in as long as it's trending up. And if the trend changes, we'll talk about that in a little bit, but if the trend changes, they'll look to exit. And there's also a third type of trading, and there's actually more than this, but the third type I want to talk about today is called swing trading. Swing trading, we're trying to get in at these little lows and get out when we hit a high. Now, in hindsight, that's easier than in real time, but that's the goal of swing trading, trying to get in at a low, get out at a high. Okay, that's kind of what a swing trader tries to do there. So compare that to the trend trader. Remember, a trend trader, if we enter, we're willing to stay the course, even though when it's pulling down like that. That's what a trend trader does. A swing trader tries to not have those little pullbacks there. So those are some basic types of trading. And if you have any questions, feel free to type those into the chat there, because between Barb and myself, we'll do our best to help you. But let's talk about this trend, because I think this is an example of a trend, a stock that's trending up. This is NVIDIA. And when we look at it, we can see, oh, here's a low, kind of a temporary low. The stock went down, bounced there as a low. And you look along the way, it did that several times. A low, and a low, and a low, and a low. And notice those lows are higher lows. And you can do the same thing for the highs. The highs, it peaks out and goes down. I'll put a little square there for our highs. There's a high. There's a high. There's a high. And so what those are higher highs. And when you have a series of higher lows and higher highs, we would consider that an upward trend. That's kind of the definition. The basic definition of an upward trend is a series of higher highs and higher lows. Well, we can do the same thing in reverse. What if the stock, and I'm going to pull up a different stock here for now. Let's do MDLZ, Mondelez, okay? Let's look at the Mondelez chart here for a sec. What do we have here? Well, we have a series of lower highs and lower lows here on this one. That's a downward trend. And one of the principles of technical analysis is, for a lot of traders, is you invest the direction of the trend. So if you're bullish traders tend to prefer upward trending stocks. Well, let's look at another upward trending stock here. And I tried to use some examples today of companies that you're going to be familiar with. Here's Tesla, uptrend or downtrend? Well, look for the higher highs, higher lows. Here's a high, here's a high, here's a high, here's, higher lows. That's our trend up there. Let's look at another example here. Let me do Eli Lilly. Okay, here's Eli Lilly. Let's see what that's doing. What do you think? Uptrend or downtrend? It's a downtrend, right? Now, some of you may look at this and go, Brent, you have moving averages on this chart, and I do. I have a 20 and a 50-day moving average. And you can see when it's trending down, the stock tends to be below those moving averages, and the moving average is sloping down. And that's a way of identifying the trend as well. If you don't want to try and pick out individual highs and lows, because let's be honest, sometimes when you have a series of higher highs and higher lows, there's one that doesn't quite fit in the mix there. But you can use your moving average to help you, and I'll show you how to use those moving averages in just a little bit. Let's look at another example. Here's American Express. Okay, here's American Express with higher highs, higher lows. What's our moving averages doing? They're sloping up, and the stock is above those moving averages, upward trend. So if you want to use the higher highs, higher lows approach, that's great. If you want to use the stock in relationship to moving averages, that's great too. You can use either one, you can use them both. Now, one question that you may have is, hey, look, when I'm doing this, this is a 20 and a 50-day moving average. Maybe if you have a different moving average, maybe you have a 200-day moving average or something there. And these different moving averages may look very different. But just realize, Longer term traders tend to focus on longer term moving averages. Shorter term traders may tend to focus on shorter term moving averages, and intermediate term or trend traders may tend to focus on more intermediate term moving averages. 20 being short term, 200 being long term, and 50 being more intermediate term. Okay, so there's your different moving averages and different ways to approach the trend. When we talk about trading stocks and using technical analysis, there are kind of three things I want to mention to you. One is trend. We just covered trend. If you have any follow-up questions on trend, let me know. The other thing is support and resistance. I'm going to abbreviate that because it takes me too long to write it out, but support and resistance. Where's the stock? Does it tend to go down to a certain area and bounce off that area? When we were looking at this stock, it kind of came down, bounced off there, came down, bounced off there. And so we'd call this a support level here. And the same thing can be held for a resistance level. When it goes up to a certain level and tends to bounce off that level, like right there, we'd call that a resistance. Now, support levels get broken, resistance levels get broken. That resistance level got broken right there. But that's kind of number two. So I'm going to say number one, trend. Number two, support and resistance. And number three, I'm going to say we're going to kind of look at we'll look at other indicators such as a momentum indicator perhaps, and that's fine. Momentum indicator, maybe an RSI, maybe a MACD, and those are examples. There's others. Now, technically, this moving average is an indicator, but this moving average can be used to help indicate trend, but you can also use it to help identify support or resistance levels at times too. For example, we may call this moving average balance right here where the stock kind of went off that moving average. We may then kind of call that moving average a support level. So a moving average can act as that. And a shorter term moving average could even be used as a momentum indicator, which is trying to give you the shorter term directional strength of a stock there. Okay? So if you have any questions, feel free to type those questions in the chat. Now let's talk about something else. Regarding trend, let me just kind of complete the trend discussion with this. Some stocks don't trend very much. Right now, what trend would we attribute to Microsoft? This is a Microsoft graph. Not much, right? I mean, here's our lows, kind of up and down, mostly roughly the same. Here's our highs. We had some lower highs there. All in all, though, this stock has just been kind of going sideways. And those moving averages aren't moving much. They're mostly going sideways. Probably we'd say not really much of a trend there. We just kind of say the stock is sideways. Here's one more example of that. Here's Apple. Same deal, right? We're not really getting a series of higher highs or higher lows on Apple. Now let's kind of switch trading types here. Well, actually, before we do that, let me just kind of give you an example of perhaps a trend. Let's say you wanted to do a trend trade. Let's bring up American Express here. Okay. First thing we're going to do on a trend trade is we're going to look and see if the stock's trending up. Is the stock trending up? There we go. We'd say that stock is trending up. Now, sometimes even if you're doing a trend trade, you may look for a support bounce or something like that before we get in. But the assumption is going to be, if we were to buy this, for example, as a swing trade, if we were to buy this as a swing trade, then it will, it's not as a trend trade. If you're going to buy this as a trend trade, the plan is not to get out typically when it has a little pullback, right? We've kind of discussed that. So if we get in here and it pulls back a few days, that's not a time frame to exit there on that, okay? Let's look at one other example. Let's pull this up. Here's a stock, and sometimes these are really stronger trends, okay? Here's IONQ, right? Strong trend, right? And the thing is, one last thing on trend is, the stronger the trend, if it's going up really strongly, like, I mean, look, this stock back here was below $10. and now we're above 30. It's probably less likely for it to continue up at this rate for as long. Whereas sometimes traders will view and they'll actually want to see a stock, maybe that hasn't gone quite so, we call that kind of parabolic at this point, but slow and steady wins the race is kind of the theory there on that. So that's your choice on that. But that's an example of trend trading. Now let's move on to swing trading, because I don't want to spend too much time on any one thing. Let's do PayPal here. Okay, here's PayPal as an example. What's our trend? Well, our trend is basically up. Now remember, with swing trading, what we like to do is we like to get in at a low and then try and get out at a high. And you can kind of see historically there's a low. And what happens is the stock goes up and then it kind of pulls back, right? It goes up and pulls back and goes up and pulls back, goes up and pulls back. Is this a period where we're about to start an upward move because we've just had a pullback? Well, I don't know for sure. I don't know what the stock is going to do going forward, but I do know in the past, it's kind of had that. And so sometimes when you're doing a swing trader, you don't want to get in. Most swing traders don't want to get in after the stock has moved up a long ways. If this was our bounce here, after it's gone up that far, we may be figuring we're closer to the top than the bottom. So they try and get in on a bounce down there is an example there on that. So let's look at some other examples here of this for a potential swing trade. And these are obviously not recommendations, but here's Chevron. What has Chevron done? Well, Chevron, the general trend has been up, so you could do a trend trade, but you could also possibly do a swing trade. It goes up and then it kind of went sideways. It went up quickly, sideways, went up, pulled back a little bit, and now it looks like it's starting to pull back, go up again here. Potential swing trade. Now, when you are doing swing trades, typically you're going to look to exit more quickly, because remember, we don't want to endure bigger falls on swing trades. Therefore, swing traders are more likely to use stop losses. And you can use a stop loss on a trend trade, no doubt, but swing traders are more likely to use even tighter stop losses. What's a stop loss? A stop loss is just an order that's going to attempt to get you out when a stock drops to a certain level that you choose. You choose that level. Well, I talked about these, I think it was last week, in fact, we talked about different order types. Just realize with stop losses, they are not guaranteed to get you out at that price, but they are a common tool that is used to try and help people get out a little quicker if you think things are going to fall. So so check out last week's session if you like, where I talk about stop losses and using those, but always remember stop losses are not guaranteed. Let's pull up MasterCard here as another example. I like to give you guys examples here on this because yes, this is a platform demonstration class, webcast, and I want to show you how to use this platform, and I'm going to show you some more things on this platform in a sec. But I also want to make it as practical as possible for you. So here we go. Trend up. Potential swing trade. Stock goes up, pulls back, pulls back, up, pulls back. Is this going to bounce? I don't know. The jury may still be out on this. Today is better than yesterday. Yesterday had a pretty ugly candle on that. But this pullback isn't the end of the world. I mean, we saw a pretty big pullback here, and it bounced up. We saw a pretty big pullback here, and it bounced up, and so on. So use the type of chart that we're doing here to try to help you decide on your type of trade. Some traders will look for a bounce off support as an entry place, an entry position for you on a swing trade. And you can use tools to help you with that. Moving averages, support and resistance levels. Now, if I want to draw levels on here, let's look at another stock here, another stock example. Let's see, we haven't looked at FedEx yet here. Okay. And Wiley said that the moving average is turning sideways. You can use that moving average as a possibility there, can't you? So, but maybe you want to draw some lines on here. You can use these tools here in the left-hand column to help draw lines. This is just a crosshairs line there. So when you click on that, before my crosshair was just a vertical line, I can make my vertical line I guess it's not really a crosshair, is it, if it's just a vertical line? Here's a crosshair where you got the crosshair. But you can go through and there's other features here. Let's use this one here. And I say, look, I want to draw a line here. So I'm going to click on it and I'm going to draw that line there. And then I click down again and it's affixed there. We're going to call that as a support level. Maybe we'll decide to set our stop loss below that support level if we were to enter there. Yeah, and this is a fairly bullish candle. I think most technicians would say. Of course, that doesn't guarantee the market's going to go up from here or the stock is going to go up from here, but it's a big green candle. And that's generally a bullish sign. But you can draw horizontal lines on here to try and help you on this. Furthermore, you can draw diagonal lines as well. Let me go to BLK. Okay? We're giving you a whole bunch of examples here today. Let's say I want to draw a diagonal line. Well, I'm going to go to my drawing tools here. I'm going to go to my little drawing line, diagonal tool drawing line. I'm going to go down here, click, and I can draw the line where I want it, and then I can affix it where I want it. And there you go. There you go. Okay. All right. And for those of you in the chat, I appreciate your participation. Dragon Rider, we don't block people unless you're doing things you're not supposed to be doing in the chat. Then we could block you, but it's not us blocking you. Sometimes I know YouTube can be a little finicky in terms of the chat, but we're not blocking you there on that, okay? So there's a diagonal trend line you can draw here. Here's horizontal lines. Here's diagonal lines. And you can play with some of these. If I do this, I can click here and I can kind of draw this arrow tool. Maybe you want that at times. You can draw circles, rectangles. You can draw other things here, including Fibonacci indicators there. Use the drawing tools. And the trick on drawing tools is, this is typically what happens. When somebody uses those drawing tools, the first time they use it, they're not really good at it, to be honest. They click and it doesn't really click down right or whatever. Play with it for 3 minutes and you'll get it, okay? You just play around, draw some lines on you. They don't need to be anywhere associated with the stock chart. You can just draw some lines on there if you like on your chart, okay? And so draw those lines. I'm just going to, let me just go and I'm going to reset that chart there, okay? So there's my reset chart. Now, I'm going to go up here. Let me pull up that 20 and 50-day moving average. You can use those moving averages to help you out with those as well. Moving averages are one type of indicator that you can use, but there's others. Go to indicators above the chart. Here's indicators, and moving averages are going to be under the trend area. Then there's others there. You just click on it, and it'll give you some examples. I have simple moving averages, but you can add exponential moving averages on there. You can add other MACD. I mentioned MACD. Let me pull up MACD here for a sec. Here's a MACD. I mentioned momentum. When do you actually enter the trade? Well, one approach that some traders use to actually enter a trade is they'll wait for something like the MACD to start to slope upward. In other words, these bars, you see how the bars were going, they're red and getting longer and longer to the downside here in this area, but then they start to shorten. That would be a sign of a momentum change. And if you look at this, correspond to, sorry, my line's not going to be perfect here. It corresponds to an area where the stock kind of turns around up there, right? Well, our lines haven't gone shorter yet, but when they do, that is likely going to correspond to a time when this is starting to turn up as well. Okay? So there you go. That is an approach. Boy, there's so many different approaches to do it, folks. And there's not, I'm trying to show you probably the most popular ways to do it, but we have a whole bunch of other webcasts to help you out. We have a Trading with Technical Indicators webcast that occurs on Mondays at 1 o'clock Eastern Time if you're interested. They'll show you a whole variety of technical indicators. But this MACD is one that I've actually liked a lot over the years, and it's a very popular one. And so I think it's a good way to demonstrate it to you. So the gist of it is, if you're trying to time a swing trade entry, you may look where those MACD kind of reverses itself from longer bars up to shorter bars. Those are potential entries. Now, could you just as this is a stock that's uptrending. Sometimes does a stock go up like this and then go like that? Well, yes. So that's it's no guarantee, but that's what we're going to start with there, okay? So use your indicators, and let's show you some other indicators here. I mentioned we have the volume. No, I didn't mention volume yet. I mentioned momentum indicators. Well, actually, I take it back. We mentioned trend indicators. Now, the funny thing is they have MACD histogram listed under trend indicator, but they actually have the full MACD, moving average convergence divergence, listed under momentum indicator. I'm not exactly sure what went into the decision-making process on that, but sometimes you can just click on search and look for your indicator there. Remember, moving averages are going to be under trend. One of the kind of cool things here on Schwab.com that's not actually available on the Thinkorswim platform is, under indicators, there are fundamental indicators. For example, you can go to PE ratio. You can pull up a PE ratio. And you could, let me get rid of that MACD here for a sec. Okay, here's your PE ratio. You can see what the PE ratio is doing on the stock. So if you're more of a fundamental, probably longer term trader, sometimes when that PE gets higher, it becomes a little bit more of a concern for you. Shorter term traders, probably not. Shorter term traders probably aren't going to use those indicators, those fundamental indicators as much. But you could say, well, what's earnings been doing over so I'm going to so I have PE ratio, rolling EPS, and probably want a longer term chart. Let's do a 5-year chart here. Okay. And here we go. I've got a 5-year chart. You can see where the PE ratio is now compared to where it's basically at its high point over the past 5 years of trading. Okay. EPS is going up, and generally fundamental investors want to see that EPS is going up. So this isn't going to be a long fundamental discussion here, but I just want you to be aware when we're talking about indicators, you can use fundamental indicators. There are other types of indicators such as volume indicators. You can just put a volume on the chart if you want. Here's volume. Probably want a shorter term chart on that to be able to actually see it. Let's do 3 months here so we can see it. Here's 3 months. Let me get rid of my PE ratio. And to get rid of these, you can just X them out right there. Here's my day-to-day volume. And there's also, we'll say, volume adjacent type indicators, such as an on-balance volume. Let me go to indicators. I'm going to go to volume. You can go to on-balance volume. Now, there's different ways to look at this on-balance volume. Here's the indicator. In general, if the stock is trending up, you'll see the OBV trending up. But let me show you a kind of a case study of what people will look for in an on-balance volume. Here's Citigroup. So here's Citigroup. Citigroup has been, let me add my on-balance volume to that chart. There we go. And let me use my other drawing tool. What you'll see is, if you look at, this may not be the greatest example in the world, but if you look at the stock from here, so from here to here, we have a higher high on that stock, right? I mean, here was the high. This is much higher there. This isn't a perfect example because the OBV actually is a little bit higher. But what people will actually look for is they'll look for the OBV to start to go down, even though the stock is going up, as kind of an early warning signal, so to speak, that some of the some of the strength of that stock is being lost there. I was thinking that Citigroup had a bigger divergence on here than it did. It doesn't really have a divergence there on there. Oh, actually, it kind of does here. Actually, I take it back. Look here. Yeah. I know what I was seeing earlier. Look here and look here. Okay, and then look at the corresponding stock price there and here. What's the stock doing? The stock is going up here, and the on-balance volume is going down. Okay, so that's kind of a common use of like the on-balance volume. That's called a divergence, by the way. If you want, we talk about divergences sometimes. That's all I'm going to talk about it in this class, but you can always go to that Trader Talks webpage, type in divergence, search under divergence on our webpage. You'll find some webcasts talking about divergences here. And if you want a little more information on there. Okay, so I think I've said what I want to say in terms of indicators. Play around with them, just like you play around with the drawing tools. Play around with those indicators there. I already showed you comparison charts. Events are like, you want to know when let's look earnings. You see, it's kind of hard to see. You can put your cursor on it, it gives you more information there. You can see what the earnings beat or miss was. If you look at that little box I'm pointing out, not the big box above it, but the little itty one that doesn't expand there, where the E is, if you can see that E right there, there's a little green arrow in there pointing up. That means it's an earnings beat there. And so, but the bottom line is you can go here and click on that. Similarly, you can go to events and do dividends. Sometimes dividend investors, dividend is going to be the D, okay? Here's the D, but you'll probably want a longer term chart here. So let's go 5 years. Let's look at the D on each of these, and you can see, oh, there's a 51-cent dividend. There's a 51-cent dividend. 51, see if it increases. 51. These guys have been consistent with their 51-cent dividend. Oh, now they increased it a little bit, 2 cents up to 53. A lot of dividend investors like to see increasing dividends. Now, they're not going to increase every quarter typically, but over the years, increasing dividends, year to year, increasing dividends. But just realize with dividend stocks, there's no guarantee the dividend's going to continue. They could cut their dividend. And furthermore, you may find a nice dividend, but if the stock drops a lot, your dividend is probably going to be a small portion of that. Then the final thing I want to mention to you is this. Once you get the chart set up to how you want to do it, how you want it, you don't want to have to recreate the wheel each time. Just go to Save Chart. It's going to ask you to name the chart. I'm actually not going to name this because it's not something I want, but you can name the chart and then you can check on it if you want it to, that's the chart you want to come up as your default chart. You can see I've saved several charts up here. You just go up to My Saved Charts, and if I want to see a longer term fundamental type chart, there's my longer term chart with my PE ratio and my earnings on it. If I want to see a shorter term candle chart, there we go. And with my moving averages on it. And so on. So play around with that. Save the charts that you want. Make it efficient for you, everybody. My goal today was this. My goal was to address your needs, to be honest. You all want to be better traders or investors, and technical analysis can be a part of your system. It's not the only thing. You know, sometimes we'll say technical analysis is not the sole form of investment research you should do. But that's probably true, but it can be an important part. And that my goal was to aid you on that using the Schwab.com platform. I do appreciate you all for joining me today, whether you're watching live or on a recording. I also, you know what else I appreciate? I appreciate Barb Armstrong. She's always wonderful. She's not just wonderful in the chat, she's a wonderful instructor in person as well. So thanks, Barb. Thanks to our production team. And thank each of you for joining us. I don't think we're going to see you next week because next week is Thanksgiving on Thursday, but in 2 weeks, we'll see you again. Bye-bye, everybody.